Good day, investors. My name is Lawrence, and thank you so much for watching this channel. A channel talks about investing in the stock market and also how you can be financially independent. If this is your first time to watch this channel, please consider subscribing so that you don't miss out on other new uploads. And if you're returning subscriber, welcome back. Today I'm going to be talking about something that actually I haven't seen anywhere being talked about, and it's actually extremely very important. What triggered me, because recently I was seeing the debate that the government of Kenya, through the Kenya Central Bank, they are planning to withdraw the treasury bills that between from 6 months and 365, which is a 1 year treasury bills. And that one triggered me. Is even people still investing in treasury bills? Because for me, I think there is something better that gives better returns, and it's even flexible, because in treasury bill, the moment you put your money, you need to take some time, up to 6 months, before you can get your money back. But for the money market funds, it's very, very flexible, yet it gives more returns than a treasury bill. So that's why I come in to compare, so that I can give you insights and why you should choose one against the other. So today I'll be comparing treasury bills and money market fund. So in simple terms, if it's your first time to hear of treasury bills, what is a treasury bill? So a treasury bill, basically, this is an instrument that the government of any country, for example, today we're talking about the government of Kenya or government of Uganda, borrows money from the public. So me and you, we can borrow, or give money to the government. So at the end of the year, or at the end of the 6 months, it will return that money with the interest. So for the treasury bill, it's always between 8 to 10, maximum of 10 per annum. So, and it normally pays after 6 months. So that's when it returns the profits, or your profits or your interest between 6 months. So that is the treasury bill. Basically, the government is borrowing money from the public at certain interest. So while money market fund, you can say this is a fund manager or an investment company that collects money from different investors. It can be you and me and even other investment companies, and it invests on behalf of us or any other person who has given them money. And normally, most of the time, it invests it in short-term instruments like the treasury bill, the treasury bonds, and also the stocks. And most of the time, it's very safe, because invest in safe options, and also it's purely regulated by the Capital Markets Authority. So mainly, most of these things are safe. So for the treasury bills, I can say 98% of the time it is very safe, because I have had very few countries that have defaulted. For example, Zambia. So there are very, very few companies, few countries that I can remember that defaulted. And money market funds is the same. It's I can say 95%. Of course, treasury bill is more secure compared to money market fund, but the difference is very, very minor, because money market funds are most of the time the ones that buy the treasury bills. So you can say most of the time, all of them, they have the same percentage of safety. So I can say all of them, they are very safe. So that's what I can say. So I want to first read some of the literature, and in that thing, I will be giving you my options, why one is better, another one is not better. So there are like three things. So this is the thing that triggered me to do this video. It says treasury to stop selling 364-day Treasury bills in reform. So this is almost 1 year. So what does it? The National Treasury is proposing to withdraw the 1-year Treasury bill from the market as part of the reforms meant to reduce exposure to short-term securities and improve transmission of monetary policy in the economy. So this one, personally, I highly recommend. There are two things. The good thing with this, for me, definitely I don't invest in Treasury bills, but instead I put my money in Treasury bond. For the Treasury bond is for the next time, but for today we are talking about the Treasury bill. So one aspect, the good thing is, actually, if it bans it, people will be encouraged to invest in money market fund, which even returns more interest compared to Treasury bill. Second is, for the investors or business people, this one is going to encourage them because already the banks, most of the banks are the ones that invest in Treasury bills. So which means if the government is no longer borrowing from those banks, it means banks will have enough money to give to the public, to borrow to the public. So it's a very, very good thing on two sides. One, people will get a better investment option. And second, if you're going to the bank, getting money from the banks may be forced to lower the interest rates from the borrowers because they no longer have where to put the money that they keep in the bank. So that's one aspect. So now let's go to the nitty gritty, where I say that Treasury bill, money market fund is far better than Treasury bills. So this is the Treasury bill. This is the announcement from the central bank.government.kenya. This is the Central Bank of Kenya. So it says issue number. This normally when you're going to buy the Treasury bills, you need to know this issuance number, dates, and also the value. So this was 17th February. It says previous average interest rate, it's 9.5. So you can see the percentage interest rate that it will be paying you is 9.11. So 182 days. So the issue number, these are the details. If you're going to buy them, it gives you 9.5 average. So a 1 year, it gives 10.7. So these are mainly the average interest rate. So the average interest rate that they will be paying you is around 9 to 10. So basically you can say the average is 9.5. So basically, if you're going to be investing in Treasury bills, don't expect anything beyond 10%. So that's one aspect. So the other aspect is, actually, I have to credit, it's called noclickmedia.co.ke. It did a wonderful article that I'm going to be reading for you, and why you need to put your money in money market funds rather than Treasury bills. So it says top 30 money market rates in Kenya as of February 2025. So it says below is the detailed breakdown of the top performing money market funds in Kenya as of February 6, 2025. The rankings are based on the gross and net returns. So number one is Saiton Money Market Fund. So this is a gross. So if there is a 2.5, this is like the of course there is a management fee in the investment firm, and also the taxes. So if you remove everything, it will be 14.15. So this is actually extremely very good. If you can earn this per annum, I can tell you this is a very good. So this one gives you actually extremely very good. It is competing with also stocks. There is another one, Lofty Coban Money Market Fund. We have Garaf Cup Money Market Fund, Etika, Ndovu. All you can see, almost all of them. The list the least one, which is Suntra Money Market Fund, is the one that returns almost the money that they are giving you. So why would you invest in Treasury bill when these money market fund are earning 14, 13? So for this money market fund, definitely you need to do your own thorough research. Sometimes this is posted is not the exact. Sometimes there might be some tricks they use to lower they may increase the management fee. So you need to be very careful so that you check exactly, is this what they promise? Is it what they give? If that is what they give, definitely this is the best. You can see these top ones, and most of them, apart from the site on money market fund, others are slightly new. So if you can see like Sunland, that is giving you 11. This is one of the like reputable money market fund. So if you invest in it, so basically, if you can see, for me, of course, I invest in money market fund. I don't invest in treasury bills. But if you're investing in treasury bills today, remove your money. Of course, you cannot remove your money now. When the 6 months comes or when the year ends, what are you doing in money market fund? You need to move your money to money market fund. So that was the comparison that I was going to make. Riveron money market fund having the highest return compared to the treasury bill. Actually, it's extremely very easy to invest or register with the money market fund and treasury bills, because treasury bill, you need to check the date, you need to check the registration, you need to check. There are a lot of nitty-gritties that are needed to do the treasury bills compared to money market fund. So I don't see even the reason why, as an individual, if you're not a big company, you should be investing in treasury bills, because it's not flexible. For example, if you have an emergency and you need money immediately, you cannot get money from the treasury bill. But for the money market fund, just takes 2 days, even 1 day. Like for now, like this ZD money market fund, you can even remove it there and then. So that's why I love money market fund compared to the treasury bills. So this one, I'm not going to even make any disclaimer that go invest and what, because these ones are 100% secure. Go and invest in money market fund compared to the treasury bill. If you're putting your money in treasury bill, you are losing almost 6 to 5% compared to if you put your money in money market fund. So if you have been with me here and you're not subscribed, please consider subscribing, hitting the bell notification, so that every video I release, you'll be able to be notified. Also, don't forget to like the video. So what else should I be talking about? These two, no matter what, which one gives more, which one gives less, as long as you're investing, you're never wrong on investing. So that's what I can say. I can recommend, keep investing. But now, if you're watching this video and you're putting money in treasury bill, you're losing a lot of money, please go remove your money from the treasury bill and put money in money market fund today, so that you can gain that big difference. It's the same as in Uganda, it's the same as elsewhere. The treasury bill are always having lower interest rate compared to money market fund, but you can check in any of the countries to compare which one is bringing more interest, because for us who allocate money, we are always looking for where is better, and also the most important thing, which one is safer. Both of them are safe, so there's no need to worry that this one is risky, this one is not risky. So all of them are secure. Thank you so much for watching. Have a wonderful day. Goodbye.